Hello, dear investors. Wishing you all a joyful and prosperous day. Today has been quite an exciting trading session, hasn't it? Especially with the remarkable performance of BTC Bitcoin and ETH Ethereum. Stick with me until the end of the video, and I'll reveal a stock ticker with great potential for investment that you won't want to miss. Without further delay, let's dive into today's key topic. Market overview. US indices. Let's start with a quick look at the three major US indices: Dow Jones, S&P 500, and Nasdaq. In my opinion, all three are currently in a sideways consolidation phase, which is actually a healthy sign. This type of price action often precedes a confirmed uptrend. At present, they are trading within narrow ranges near their recent highs, which is quite a positive signal. Now, let's take a look at the BTC chart. As observed, Bitcoin remains in a very clear uptrend. As I've mentioned in previous videos, BTC has not yet breached any critical support zones that would require short-term investors to exit their positions. Therefore, holding BTC remains a valid strategy. Around the $105,600 level, many investors panicked and sold. But in my view, that was actually an ideal buy zone, supported by strong bullish volume, a signal of institutional interest and accumulation. Furthermore, the daily candlestick that closed near that price had a very narrow trading range, indicating low volatility and confirming strong support. That was a clear sign to continue holding the position rather than selling in fear. Today, we've seen the result. BTC has appreciated in value, awarding those who held firm when others were uncertain. Across forums, and especially among newer trading communities, many were anticipating further corrections. And yes, if BTC had closed below $105,600 again, it would have signaled a breakdown requiring time to re-establish a new base. Fortunately, that bearish scenario did not materialize. Current strategy. At this stage, BTC no longer offers an ideal entry point for new short-term positions. However, for investors who entered at lower levels, it still looks technically strong. BTC appears to be in a bullish consolidation pattern, and even if minor pullbacks occur, they are likely to be healthy corrections within an uptrend. In my opinion, it would be better if BTC continues to accumulate for a few more sessions, thereby confirming its next upward leg. However, there's also the chance that institutional buyers could push prices higher immediately, a scenario that cannot be ruled out. Final note: if BTC closes back below the $105,600 level, that would be a major red flag. In that case, you should consider exiting your position and reassessing. But as long as that support holds, maintaining your position is the right strategy. Congratulations to all the investors who bought at an excellent price point. This is your reward for patience and strategic positioning. Next, let's move on to ETH Ethereum. Looking at the chart, ETH shares many similarities with BTC. For those who managed to buy in at the lower end of the price channel, congratulations. You can comfortably hold your position. Many investors have been asking me about ETH, so I often share updates to address these questions. At the moment, ETH is trending upwards within a narrow trading range, but recently encountered resistance and experienced a pullback. According to the daily chart on TradingView dated July 1, 2025, the daily candle closed right at the balance or consolidation zone, which is a technically ideal entry point. This is because the correction was shallow and did not break below the consolidation area, signaling that ETH remains strong within its uptrend. This kind of retracement back to the base is actually a great opportunity for investors who are looking for ideal entry points. Risk scenario. A worst-case scenario would be if ETH breaks below the consolidation zone and closes below the $2,400 level on a daily candle. In that case, investors should immediately exit all positions. Fortunately, this did not occur. Instead, ETH only pulled back slightly, returning to an ideal accumulation zone, providing an excellent chance for investors who had not yet entered to open new long positions. Currently, institutional activity appears to be supporting price levels, pushing ETH upward while maintaining a solid uptrend. Therefore, anyone who entered around $2,410 can continue to hold confidently, as ETH is still respecting its bullish structure. Contingency plan. If ETH reverses and closes below $2,400, it could signal a breakdown of the uptrend and may lead to deeper corrections. In that case, it's essential to immediately exit your position and stay on the sidelines. As retail investors, we must always plan for worst-case scenarios to protect our portfolios and reduce unnecessary risks. Current strategy and viewpoint. At this stage, investors who bought during the lower range can continue holding. Even if ETH experiences minor pullbacks, there's no cause for concern unless the trend is violated. However, for new positions, I personally do not recommend entering at current price levels, as the risk-reward ratio is no longer favorable for short-term traders. Many investors prefer to buy during breakouts, but in this phase, it is better to wait for stronger confirmation of the next move. As retail investors, our advantage lies in holding long-term positions when we have entered from favorable price zones. Next, let's take a look at Amazon stock. I have a positive outlook on AMS, as it is demonstrating a steady uptrend. The initial accumulation zone or probing buy range for this stock is around $218.8, which is a reasonable entry point for investors. Although AMS is moving upward at a slower pace and lacks the sharp breakout momentum seen in some other stocks, it is climbing in a stable and structured manner. For investors with a patient, long-term mindset, this stock is suitable for participation, especially considering it is already in an established trend. Behavioral profile and strategy. Because AMS tends to move cautiously with frequent consolidation, it is less likely to experience sharp declines. Each upward move is typically accompanied by healthy consolidation, which tends to shake out short-term breakout traders who are not able to hold through slow climbs. Therefore, the right approach is to enter when the stock is balanced within an uptrend, so that even if a pullback occurs, it minimizes the chance of being caught in an intraday loss. Risk management and follow-up actions. The stop-loss level to exit the position would be a daily close below $210.9. This would signal a potential breakdown of the current trend. On the other hand, if in the coming sessions, the stock pulls back to around $218.9, and the daily candlestick shows narrow range movement, that could present another buying opportunity for incremental allocation. Next, let's move on to the stock ticker Apple. On the chart, we can clearly see that this is a buy the dip stock. The more it declines, the more buying interest it attracts. Today's session opened with a drop, causing some panic at first, but in fact, that very pullback presented a safe entry point for positioning. We've already identified ideal sell zones, so there's no reason to fear entering a position at price levels that have been previously confirmed. Retail investors like us typically only incur losses when we sell during a decline, which is precisely why we need to do the opposite, buy on dips, but only when the stock is showing a solid trend at a reasonable price level. Never buy a stock that lacks proper consolidation or accumulation. Therefore, today's entry point was ideal, but in terms of initiating new positions, we're likely past the optimal risk-reward zone for fresh capital allocation. The safe buying zone is often where most investors are fearful, and in a typical uptrend, it's normal for the stock to pull back after a rise. These technical corrections are necessary to shake out weak hands retail investors and strengthen the trend. Once you're aware of this mechanism, opening a long position becomes much more strategic. As for our stop loss or exit strategy, any daily candle closing below $200 should trigger a portfolio exit. With this risk framework in place, we can confidently deploy capital into our portfolio. There's been a lot of noise online recently, especially regarding news that legendary investors have exited their positions in Apple with large sell-offs, which has allegedly capped the stock's upside. But we must remember that's media narrative. If the stock presents a valid buy setup, we must remain flexible in entering or exiting based on price action, not headlines. Legendary investors typically only sell after their return targets are met, and many of them still hold sizable positions in Apple. We shouldn't let media sentiment derail us and miss potential investment opportunities. Stick to the plan. If the stock violates your setup, exit otherwise. Stay the course. In terms of the current trend, Apple still looks solid. However, in my opinion, the stock would benefit from some sideways movement to build a stronger base of accumulation. That would provide a more explosive breakout when the next leg up occurs. For those who bought near the lower support zones, as I mentioned in previous videos, you can comfortably hold your positions. There's no reason to panic as long as the stock hasn't entered a violation zone. Yes. Next we move on to the Into stock ticker, which I mentioned at the beginning of the video. Currently, this stock looks very promising with a strong upward momentum driven by large institutional investors. Therefore, retail investors like us need to pay attention to the upcoming trading session. Notably, the stock has already formed a solid accumulation zone, and its weekly chart shows a textbook cup and handle pattern, which is ideal for investment based on legendary investment strategies. We can consider entering a new position at the price level of $754.5, which is an ideal entry point. Moreover, the daily candle range should be consistent, and if the price drops without causing major shocks, we can still enter the market. If tomorrow's trading session shows a slight decline with a narrow range, we should observe closely and may consider allocating funds at the end of the trading day. This approach is still safe with a stock like this. We can sell out of the portfolio when the stock drops to the price level where the daily candle closes at 719. Currently, retail investors are panicking and reluctant to buy in, especially waiting for a gap fill before entering. However, in my opinion, the stock still needs to accumulate, and it's unlikely to drop back to fill the gap below. Therefore, investors can seize the opportunity and accumulate at the lower price zone by cautiously entering new positions for a better position. I reiterate that the stock is in a strong uptrend, but investors must act prudently and follow the strategy of selling when it goes against the trend. I believe this stock is about to enter a very attractive upward trend because it has all the necessary factors and the momentum has already been. This is the stock I mentioned, and I hope investors will keep an eye on the video for more attractive stocks in their portfolios. Feel free to contact me for advice or portfolio restructuring if you are currently incurring losses. This is my personal opinion, and the channel owner disclaims any responsibility. I encourage investors to find a suitable entry point for their portfolios. That's all, and I look forward to the next video from me. Don't forget to subscribe to the channel to motivate me to create more videos for you.